Let me describe someone to you. Let's call him Mark. Mark is a smart guy. The kind of person society points to as a success story. He wears a sharp suit to work every day. He has a stable corporate job, and he's done exactly what every financial book, every college professor, and every mainstream advisor told him to do. He doesn't buy the $7 lattes. He doesn't upgrade his phone every year. He has absolutely no credit card debt. And after years of disciplined sacrifice, he's finally saved up $50,000. To Mark, that $50,000 represents a decade of his life, thousands of hours of labor, missed vacations, and late nights at the office. He has that money sitting in what the bank calls a high-yield savings account. Every morning, he checks his banking app, and he sees that 4.5% interest rate glowing on the screen. He feels a deep sense of accomplishment. He thinks he's beating the system. He thinks that $50,000 is his ultimate safety net for the 2026 economic shift we're all feeling. But here is the brutal, terrifying truth that Mark doesn't see. While he's sleeping, while he's celebrating those small interest payments, the bank is using his $50,000 as fuel to buy the very assets that are making him poorer. Mark thinks he's an investor, but in reality, he is just a lender, and he is lending his hard-earned life to a system that is devaluing it faster than he can possibly save it. If you have money in a savings account right now and you feel safe, I need you to stop what you're doing and listen very carefully, because in 2026, safe is the new bankrupt. Today, I am going to show you the math that the banks pray you never calculate on your own. I am going to show you why your high-yield account is actually a sophisticated psychological trap designed to keep you trapped in the paper class while the global elites move silently into the asset class. To understand the trap, we have to look at what I call the hidden tax. This isn't a tax you'll see on your paycheck, but it's the most aggressive wealth confiscation tool in human history. The bank tells you they are paying you 4.5%. That sounds great on a digital screen, especially when your parents were earning 0% for a decade. But the bank conveniently forgets to mention the 3 layers of erosion that are eating Mark's $50,000 while he is busy working his The first layer is the official inflation rate, the one the government puts in press releases to keep the markets calm. But the second layer is where the real damage happens. Shadow inflation. This is the real-world cost of things Mark actually needs to survive and maintain his status. We're talking about health insurance premiums that have spiked, property taxes that are climbing regardless of home value, and the energy costs required just to keep his lights on and his car moving. When you add these up, the real cost of living in 2026 is rising at a rate of 12 to 15%. Now, do the math with me, because this is the part where Mark's world starts to crumble. If Mark is earning 4.5% in his safe account, but the world around him is getting 12% more expensive, Mark isn't making money. He is losing 7.5% of his purchasing power every single year. His $50,000 still says $50,000 on the screen, but that money buys 7% less reality than it did 12 months ago. It buys less land, it buys less fuel, and ultimately, it buys less freedom. The bank is essentially paying Mark in monopoly money while they use his real capital to buy up the world's resources. But there's a third layer to this trap that Mark hasn't considered, and it's the most insulting part of all: the tax on false gains. Even though Mark is technically losing money in terms of what his dollars can buy, the government sees that 4.5% interest as a profit. They will tax him on that nominal increase. So, not only is his money buying less every day, but he has to give a portion of those losing gains back to the state in the form of income tax. By the time the dust settles, Mark's saved $50,000 is shrinking at an industrial pace, all while he's being told he's doing a great job. This is the psychological warfare of the current era. They want you to feel proud of your savings, because as long as your money is in their vault, it belongs to them, not you. Now, we have to ask the most important question. Why does the system encourage these accounts so heavily? Why is every influencer, every major commercial bank, and every government-backed financial advisor pushing high-yield savings as the ultimate solution for the average person? It's because it is the ultimate liquidity tool for the institutions, not for you. You have to understand that when you put your money in that account, You aren't saving it in the way your grandparents did in the 90s. You are providing the bank with an extremely low-interest loan that they can use to gamble against you. Under the modern rules of fractional reserve banking, the bank takes Mark's $50,000 and uses it as a mathematical base to create hundreds of thousands of dollars in new lending power. They aren't keeping your money in a safe. They are lending it out for high-interest credit cards at 24%, for auto loans at 8%, and for massive corporate debt. You are the silent, unpaid partner in a massive profit machine. You take all the risk of currency, devaluation, and bank failure, while they take all the profit from the interest spread. And what is your reward? A tiny interest payment that doesn't even cover the rise in the cost of a gallon of milk or a basic insurance policy. This is the two-income trap for the modern age. Just like having two incomes made families more fragile by increasing their fixed costs and removing their safety margin. 2. Savings. Trap makes you fragile by keeping your wealth in a digital format that the system can control, with a single update to its terms of service. In 2026, as we move closer to the full rollout of the digital dollar and programmable CB, this trap officially becomes a cage. Your savings will no longer be private or even truly yours. They will be visible, trackable, and potentially programmable. The system will have the power to nudge your behavior, incentivizing you to spend by applying negative interest rates if you save too much, or penalizing you for holding capital that the government wants circulating in specific sectors of the economy. If your wealth is just a ledger entry in a commercial bank, you don't actually have wealth. You have a permission slip, and as we've seen globally in recent years, permission can be revoked the moment you step outside the lines of the narrative. So, what is the alternative for someone like Mark? Does he just go out and spend his $50,000 on luxury goods and vacations? Absolutely not. That's exactly what the system wants for you to remain a consumer. The architect doesn't consume. The architect converts. You must move from the mindset of nominal savings to the mindset of utility reserves. Instead of holding paper promises, you move into the age of atoms. You have to start buying the very things that banks are buying with your money while you're not looking. While they tell you to keep your cash in their vaults for safety, they are busy using that liquidity to acquire productive farmland, critical energy infrastructure, and hard commodities. They are trading their own devaluing paper for permanent reality. You need to follow the smart money, not the marketing brochures. This means shifting your idle cash into the anti-inflation portfolio. It means moving out of the digital grid and into physical assets like precious metals stored in private, non-bank vaults. It means looking at productive assets that generate essential utility of things that people will always need, regardless of whether the dollar is at an all-time high or an all-time low. The goal is to reach a state of strategic liquidity. You keep only what you absolutely need for 30 to 60 days of operational expenses in the banking system. Every other dollar, every single cent of excess capital, is immediately converted into an asset that has no counterparty risk. The transition from a saver to an architect is at its core a shift in identity. You have to stop looking for the psychological comfort of a high number in your banking app. That number is a digital illusion designed to keep you compliant and quiet. Real security doesn't come from a bank's promise to pay you back in a currency they are actively destroying. Real security comes from owning the means of production, the land under your feet, and the hard assets in your hand. The banks want you to stay in the waiting room, distracted by a 4% interest rate while they build the future behind closed doors. It's time to stop being the lender and start being the owner. It is time to pick the lock of the savings trap and join the ranks of those who own the reality of 2026.